What's up, guys? So in this video, I'm going to show you guys a step-by-step process on how I analyze the forex market and how I also look for a confirmation entry on the lower time frame. Now, I've noticed that a lot of people don't really understand how I analyze my charts, so that's one of the main reasons why I'm actually making this video. So if you're new to the channel, my name is Tango the First, and I drop forex related content. So if you like to keep seeing my videos, don't forget to subscribe to the channel, like the video, and turn on notification bell so that YouTube will notify you whenever I drop a new video. So without wasting much of your time, let's dive right into the chart.
So on the chart right here, this is exactly how I trade. Okay, so as you guys can see, I have some things that look like pattern. Yeah, basically two patterns that I normally trade. Now I'm going to be using the word pattern to make it simple for you guys to understand. So I have first pattern, which is this one, and I have second pattern. Now here are words I'm going to be using. I'll use pattern and I'll use support and resistance, so it will be very clear for you guys to understand. Now, pattern number one. This is what I want to see in price. I want to see price, first of all, drop into a higher time frame support level. So this line right here, this rectangle, is going to be higher time frame support level. So once price trades into it, then I want to see a break of market structure on this high. So it will break this high. Now once it breaks this high, next thing I expect it to do is to retrace back down. Now, where do I want it to retrace back down to? I want it to retrace to an order block, a fair value gap, or a breaker block. I'm going to explain these three things for you guys. So, but for this example, I'm going to be making use of the fair value gap more than any other point of interest in this video. So, once price trades down, it sees the fair value gap, I'll be taking an entry from here. My stop loss can be down here, and my take profits can be this high or any other high to the left side. So that is how I trade this type of pattern. Now, my pattern number two. This is when price trades down to a higher time frame support level. When it trades to a higher time frame support level, it will break a structure to the upside, break a market structure to the upside, which is BOS. So break of market structure is BOS. Once it breaks it, it will start retracing down. And once it's retracing down, it will pause at a point, then make a fake rally to the upside, but it won't take out this high. Now when it makes that fake rally, it will then drop at a later price point into a fair value gap, an order block, or a breaker block. So once it trades into a fair value gap, a bullish order block, or a breaker block, it will now rally up and take out this high right here. So these are the two types of pattern that I trade. Now let me explain to you guys what is an order block, a fair value gap, and a breaker block. So follow me right here. Now look at this one right here. This is a bullish order block. Okay, this candle right here is a bullish order block. Now what is a bullish order block? A bullish order block is the last bearish candle before the up movement. So the last bearish candle before the break of market structure to the upside. So this is a bullish order block. That is what I marked out right here. Now the second one is a breaker block. So what is a breaker block? A breaker block is the last bullish candle prior to the down move that took out a low before taking out a high. Calm down and let that sink in. A breaker block, a bullish breaker block, is the last bullish candle prior to the move that took out a sell sign liquidity before the bullish move. So this is what I mean here. Price created a low here, went up, came down again and take out this low, then rally up and take out this high. So after doing this, what do I expect price to do again? So it will just come back. So I expect price to come back into this breaker block, then rally to the upside. Same thing with this bullish order block. Price will come back, trade into the bullish order block, then rally up. Now the next one is a fair value gap. So you can see that price started from here, rally up, came back again, move up and broke market structure to the upside. So this is actually a market structure to the upside. Then a fair value gap formed below this market structure shifts. So there's a fair value gap here. Now what do I expect price to do next? I expect price to come back, retrace the fair value gap, and move to the upside. So these are the 3 price points I expect price to retrace back to before I take any trade. Now, I've explained to you guys the 2 patterns I use. Now, before I start looking for these 2 patterns, I want to show you guys what I actually do on the higher time frame, which is the weekly, the daily, and the monthly. So these are the things I look out for on this higher time frame before I start using these 2 patterns to take any trade. Now, let me take you guys to the higher time frame. Now, for this example, I'm going to be using this as the higher time frame, which means we have a resistance and we have a support. So I'll be using the 2 words, support and resistance, although I don't trade support and resistance, but to make this more clear to you guys, I'll be using the words support and resistance. So price has been trading down, going down, forming highs, going down, trading down, then got to support. Okay, let me take this back. So price has gotten to support. Now, where do I expect price to go to next? Now, once price has been trading lower and it has hit a support level and we anticipate it to go higher, then all these moves here are going to be the drawn liquidity. Okay, they are going to be price points where price is going to go to next. Now, where do liquidity resides? Liquidity resides above old highs, old lows, equal highs, equal lows, liquidity voids. So these are places where liquidity resides. Now, for this example, I'm going to be using old highs because we are bullish. Old highs, equal highs, and liquidity void. So these are the 3 examples I'm going to be showing you guys right here. So on this chart right now, where are the old highs? This is an old high. This is an old high. This is an old high. These are equal highs. And I'm going to use here as liquidity void. Okay, but let me delete it. The old highs are enough. All right, so where do I anticipate price to go to next? Since price has hit a support level, we anticipate it to take out all these old highs. Then we'll go to the upside. Price doesn't move in straight line like this. Okay, it can still be moving like this while going to the upside. This is just for example. Now, once I identify all these things, then I start looking for these patterns I showed you guys previously. Which are these patterns? So I'll be taking trades on the 4-hour time frame, 1-hour time frame, and 15 minutes time frame. That's where I'll be looking for all these patterns. And while looking for all these patterns, I'm anticipating price to drop into other block, a breakout block, and a fair value gap. Then I'll take a trade to the upside. So everything I'm doing here is going to be for when we are bullish. All right. Now let me take you guys to the charts and show you guys how I replicate all these things in the charts. So like I said, first of all, what do I look out for? I look at the higher time frame chart and see where there is support and resistance. Okay, so if we have been trading lower, I want to see where price is going to hit, then we start moving up. Now on the 4-hour time frame, I'm going to show you guys where price is going to go to after hitting the support level. Now, as if you look right here, you see that this is a daily OB. This is a daily order block. It's a support zone. This is a 4-hour fair value gap. It is also a higher time frame support zone. So I'm anticipating price to move up from here. Now, to where is price going to? Remember that I told you guys that liquidity rests above old highs, old lows, liquidity voids, equal highs and equal lows. Now let's look for those significant points right now. Let me delete this. Now this is an old high. This is an old high. And this is an old high. So I'm just going to use these 3 reference points for now. I don't want to make this video too long. So where am I going to take a trade right now? Remember that price has gotten to a support level, which is this fair value gap right here. What do? Since you got into a higher time frame support level, you go down to a lower time frame. And for this, I'm going to move to a 15 minutes time frame. Now, here we are on the 15 minutes time frame, and this is the same daily order block I showed you on the 4-hour time frame, and this is the same fair value gap which I referred to as a support level on the higher time frame. Now, what did price do right here? I want you to pay close attention right here. Look at what price did. We had a break of market structure to the upside. This already has confirmed the move that we want to go higher. Okay, BOS, which is break of market structure. We broke high. Now after breaking market structure, what is going to happen next? Remember the two patterns I told you guys, where it breaks high, it retraces down into a fair value gap, an order block or a breaker block. Where the price retraces to at this point right now, we have a fair value gap right here. This is a fair value gap, and price retraces back into this fair value gap. So what are you going to do? We take a trade at this point. So we'll take a trade at this point to target where this is a high that has already been created. So you can target this high, or you can move to the left side and target these highs. So either this high or this high. So I will targeting this high. Then we'll take a buy position here with your TP at that high, and your stop loss can be at this low, or you can you can refine your stop loss and make it smaller by going to the 1 minute time frame, 3 minutes time frame, or a 5 minutes time frame to look for a confirmation entry. Okay, I'm not going to be covering that in this video. If you like to know how to get a lower time frame confirmation, you can watch the video with the link above. Now this trade actually resulted in profits, and mind you, I actually took this trade this week. Okay, this was on Tuesday. I took the trade. Those in my Telegram channel can testify of this. If you want to join my Telegram channel, the link is in the description box below. Now, whenever I take a trade and get a winning trade for the day, I am done. I am done for that day. I'll look for trade the next day. Now, the reason is because I actually trade two sections, the London session and the New York session. These are the two sessions I normally trade. So this move right here happened in New York session, so I took the trade. Now what am I going to do next? I wait for the next day. I don't chase price. I wait for the next day. There's going to be another opportunity in the market. So for this reason, we'll wait for the next day. Now let me show you guys the next day. Now this was on Tuesday, and this line right here is the marketing Tuesday and Wednesday. So from here is Wednesday. Now this is Wednesday trading. Now, as you can see, price has just been going up, consolidating. You need to go to a higher time frame to identify where price is going to drop down to again for you to buy. So for this, I'll be going down to the 4-hour time frame. Remember that this is the place where we took a trade. So I'm going to delete this right now. Delete. Now, on the 4-hour time frame, the same thing that happened on the 15 minutes time frame actually happened here, which is this first pattern I told you guys, the break and retrace. Okay, so let me delete this high so that our chart will be clean. Now this high has been traded to, and price break the structure. Now we now have a break of market structure on the 4-hour time frame. This is to show you that everything that happens on a 1-hour time frame can still happen on the 4-hour time frame. Everything that happens on the 4-hour time frame can happen on the 1 minute time frame, 3 minutes time frame, 2 minutes time frame, 5 minutes time frame. Okay. Now, after price broke this structure, what will I be looking for next? I want to see a retracement down into what? Fair value gap, breaker block, and an order block. So let's look for it right here. Now, what do you see right here? You can see that we have a fair value gap here, and we also have a fair value gap here. We have two fair value gaps. What do you do at this point? You take the fair value gap below 50% of the range. Okay, I didn't cover this at first, but this is something you need to put into consideration. You take the fair value gap that is below the 50% of this range. What is the range from this low to this high? Where is the 50% fair value gap? This fair value gap is below 50%. Okay, so we'll be taking the trade from this fair value gap. Let me mark it out. From this fair value gap, this is where we're taking the trade from. Now let's go down to the 15 minutes time frame so that we get a more refined entry right here. Now, if you are taking a trade from here, where will be your target point? Look at this high. This high and this high too. So let's go to the 15 minutes time frame. Now this is the move here. Price has retraced into this fair value gap, and we're on the 15 minutes time frame right now. You take a buy, or you look for a confirmation entry on the 1 minute time frame, 3 minutes time frame, and the 5 minutes time frame. Where will be your take profit? This high right here. That is it, guys. And all this trade I'm showing you guys right now, I took all this trade. You can find them in my Telegram channel. The link is in the description box below. Now, when you take this trade, you are looking to take profit at this high. And what's happened? Boom, you hit it. That was about 69 pips. That's the power of looking for trade on the higher time frame. So, after getting a trade today, what do you do next? You wait for the next day. Remember I told you guys I trade time before price. Okay, so I'm done for the day. Price has gotten to where I want it to get to, which is this old high. So once price has gotten here, I'll wait till the next day. Now let's go to the next day. Today is Thursday. Today is Wednesday, so let's go to Thursday. This line right here is demarcating Wednesday from Thursday. Now from here, moving forward is Thursday. Now what do you look for? You look for the same thing, break of market structure. As you can see, we have a break of market structure right here. But look at this price movement. It is not very clean. Now what do you do at this point? You drop down to the 1 hour time frame or the 4 hour time frame. So you go into a higher time frame to get a more clear entry. So for this scenario, we'll go to a 4 hour time frame. Now, this is the break of market structure on the 4 hour time frame. Where is the fair value gap where price will drop down to? Or where is the other block where price will drop down to? Let's mark it out. This is the fair value gap. This candle's low and this candle's high. That's the fair value gap. But let me go to the 1 hour time frame so this thing will be more clear. Now this is Thursday trading. Now I want you guys to pay close attention and observe what's really happened here. Remember I told you guys that I trade two different patterns, which is this pattern and this pattern. So this pattern is when price comes down to a higher time frame support level, break market structure, retrace back to a fair value gap, other block or a breaker block, and rally up. The second pattern is when price trades to a support higher time frame support level, break market structure, comes down, fails to come down into a fair value gap, rally up a little bit, then break the market structure and take out liquidity, then rally up. Now look at what's happened right here. Look at what happened right here. This is the 4 hour fair value gap. Price broke structure to the upside, rally up, came down again, failed to get into the fair value gap on this candle, rally up a little bit, came back again and hit this fair value gap, then we rally up. So that is the second pattern I showed you guys on the previous slide. But guess what? I lost a trade here. I was a victim at this point. I lost the trade here, which I actually posted in my Telegram channel. Price rallied up. I moved my stop loss to break even. I got taken out. The price got into this fair value gap again. I was lucky to get a trade on this fair value gap once more during New York session. Alright. Now if you want to get in here, where we'll be getting in, of course, the high of the fair value gap, which is right here. Where will you be putting your take profits? This high is okay. Stop loss, this low is okay. Alright, that was about 47 peak take profit, and I got this trade. Now guess what happened again? Price broke structure to the upside, came down again, reacted from another fair value gap, which actually formed during this price movement to the upside, and it reacted up from it and started going higher again, breaking another market structure. But I didn't take any trade again because I've already cut on this one. So I'm done for the day. It is Thursday. Now let's now move to Friday. This is Friday's open. Remember I told you guys I trade time and price. Now, what is going on here? We have a market came down, broke structure to the upside. This is a market structure break. Failed to retrace back down into this fair value gap. This is very, very likely to happen, and it happened to me today being Friday. So by the time I'm making this video, this is February 14, 2025. By the way, happy Valentine's to you guys. So price failed to come back into a fair value gap right here. But let's go to the 15 minutes time frame. Let me show you guys something. On the 15 minutes time frame, this is a fair value gap, and price reacted up from it. And right here is also an old high. I don't want to go into that. I just want to show you guys the most simple pattern I trade. Now, I actually marked out this fair value gap right here. Let me delete this. Let me use this. I'm going to use it in future. Let me keep it right here. So I actually marked out this fair value gap right here. I was anticipating price to drop into this fair value gap, but it failed to. This is likely to happen. It cannot get every move, and it cannot win every trade. So it failed to get into here, which I actually posted in my Telegram channel, and you can see it right here. I posted it, and price didn't get here. Instead, price formed what we call a London delay protraction. I don't want to go into that kind of details because it's going to confuse a lot of people. But since price didn't get here, guess what happened next? We had a market structure shift to the upside on this move, this price point. Now, after this break of structure, what do you expect next? You expect price to drop down into a fair value gap, a bullish order block, or a breaker block. Now, where did it drop into on this one? It dropped right into a bullish order block right here. And what will you do? You already know what to do. You buy. You buy. Where is the target point? This is a high. If it's too small, you look at the previous high. You look at old highs by your left. Okay, you look at old highs by your left. Now look at this line. This is one of the highs I marked out, so you can move your take profits to that point. And guess what? You hit TP. So this is basically how I trade the forex market. This is how I analyze my chart. It's not very complicated. I trade with time then price. So if you like to keep seeing my content, don't forget to subscribe to the channel, like the video, and turn on the notification bell. To stay very close to me, you can join my Telegram channel with the link in the description box below, where I drop my daily trades idea, and I only trade two particular pairs, GBP USD and Euro USD. So I guess that's all for this video. I don't want to make it too long. Don't forget to subscribe, like the video, and turn on the notification bell. I'll see you guys in the next video.